I'm going to tell you my ways, the way that I do it. And there's a lot of ways that you can do it. And I'm going to show you a whole bunch of ways that you can do this. But the main thing you want to look is for support and resistance areas. And I talk about this on every video. And I don't set a profit target order really to say. I set a profit target that I would like to see the trade get to, that I think it may get to, and then I adjust my stop loss accordingly. That's the way I manage my trade. I really don't set a profit target, and when it hits that target, I'm out of the trade. I like to move my stop loss up and move it to certain levels to be able to get to that level. Now looking at this, this is a trade I made today. Well, not today, but this is a trade that I was in that closed today. And we get in here, we need to know where we're going to go. So we have our stop loss set, and then we want to know how far this trade is going to go. So you need to look at past history and look for support and resistance levels. So the very first one I notice is this line right here. I mean this level right here. So I'll put a line there. I'll put it a little bit below just to be safe, because we may not hit that target all the way. And that's how I'm getting the target level. That's where we're thinking that the trade's going to go to. So when we break this Kumo on the Kumo breakout, we're looking for price to go to this level. And when you look back, if you can't find a level on your time frame, you have to go to the next time frame higher. So this is the 4-hour time frame, and I would go to the daily time frame next. So looking for a spot, I would go to the daily and put it there, and then I can put another one here. And I know that this is a double top, so price may not go through there the very first time. So looking at that, we see price come up to this level. If price comes up to that level, that's a double top. And it looks like price came so close, and look how far back it came down. Pushed it all the way back down there. And we're pretty much at the close of the market right now. So that's where you find your levels that you're going to set your target. Now the way I do it is I have my stop loss set. So let's make our stop loss and show that. So if this is my stop loss, once price moves up a little bit, I want to be able to break even, right? So price moves up, gets up to here, gets past this level here. This is a support level, a minor resistance level rather, because it made a fractal here. See the fractal mark? Made the fractal, came back, hit that level, then price broke out. Now price broke that fractal level, and this is when you get into a trade also, when price breaks the fractal level. So if this is when you get into a trade, this is also a spot where you could get out of a trade or set a target. So our target is we break that level, and the very first time I'm not going to set the stop loss up to there. I'm going to set it down here. So I have some profit, a little bit of profit. I'm breaking even right here really, because I got in right at that line. So then the price keeps moving up, and it gets up to here. And then here's my target. Well, I don't want to lose everything, so yeah, I can move my stop loss up here. And I still don't have a limit set to take profit. So now price moves up here, and I'm saying, okay, I'm pretty good. And we shot way up past that level. So if price gets here, I probably would get out the market, yeah, because this is a double top, and that's telling me a lot of times on a double top, price is going to hit that level, and then it's going to fall down and then attempt to break it again. So I would have probably definitely get out the market right here. But then I move my stop up to here, a little bit below that level. Okay, so now it's been a while that the trade's been going on, and I'm just moving my stop loss up, and then I'm gonna let myself get stopped out wherever the profit is. So now the market shot way up here, and I'm saying if we can get to this level, then yeah, we take the profit target. I didn't have this drawn on the chart because I was showing my level on a different way. But this is the way that you want to do, and then when price gets up to that level, you're going to take that because that's a double top. So yeah, you'll take that profit there. But if you don't want to do that and you think price may break, then once it gets up to that level, then you could probably move your stop loss up here a little bit, just right there. And now if price breaks that level, now you can move your stop loss up to this level. So you just keep that stop loss set and moving it up and moving it up and following the market. And eventually you get stopped out. And if you got stopped out here, you see I got 116 pip profit right here. So that's the way that I do that. I just keep moving my stop loss up. I don't really set a limit, take a profit target. I have targets where I think the market's going to go. Now, sometimes I'll set a area and say that pretty much I don't think the market's going to break this level. So yeah, I'm going to take profit when it hits this level. And sometimes if I'm very busy, I'll set a target level. But usually I'll move my stop loss. That's what I just usually do. Just move the stop loss with the market. Okay, so that's how I show you on there. Now another thing that you can do, and I've shown this before, the market is always looking at 1-to-1 ratios. This doesn't always happen. So never, when I say always, I don't mean this is a always occurrence in the market, because nothing is always. If everything was always, we'd be rich, right? Because we'd be able to know what to do with the market because it always does the same thing over and over. But there are some things that it does pretty consistently over and over. And one of them is it makes this 1-to-1 market ratio when it pulls back. So this pullback and then pulls back makes the same level. So I bet you this level from here to here is going to be the same from here to here. So let's see. So if that is the same, that's telling me that's where I can expect to take profit, because maybe a pullback is going to happen in that level. And then I'll show you what I do still. I still don't set a limit order to take profit. I still move my stop loss up accordingly. Okay, so the first time price went up, came down. So if you got into the trade here, you would be shooting for this mark level right here, right? So people using Fibonacci retracements, you get in on this 50% retracement level right here. And if you got into the market right here, you would say, well, where would I put as a profit target? Your profit target is going to be here, this 100%, because the 100% move would make that the exact same length as this move. So that's the 1-to-1 ratio, and the market does it a lot. So yeah, you did it there. So now the market moved again. So you want to do another one, right? So we'll take this one off, put another one on. So this time we're going from here to here, and then the market moved down to here. Okay, so we got in the market. Oops. We got into the market right here, and we're looking at the 1-to-1 ratio. So if it's a 1-to-1 ratio, this move from here to here, the next move should be 100% of that move. So from here, where this last low was right here, fractal level, the market's going to go to this 100% level. So again, we put our stop loss. Now we have our stop loss. Now the market started moving. We broke this 61. So once we broke that, we put our stop loss a little below that level. You can put it below that candle if you like. You could put it below this fractal level. There's areas to put this. So you put this a little bit below that level, and then the market kept going. Okay, so then when the market broke that 61 level, 61.8, you go to the next level. And it goes to the next level, and you put your stop loss up here because the market broke that 100% level. When it broke that level, it closed way above it. So we put our stop loss down here again. And now let the market stop us out. The market stopped us out right there. And we took the 116 pips. So you could see where that is right here. Started right here. And then it over there where we got stopped out by moving the stop loss up to that level. And that's the way I did that trade. So you can do that. And then again, there's another thing that you can do. These are the ways that you do. First, I'm going to look for the support and resistance zones. And those are the levels that I'm expecting the market to go to. So yes, this will be a level. So I'm moving back in time, looking back in time. This is going to be my target level way up here. And then that double top way up here. So these are levels where I would put the profit target. But I'm not going to set a target. I'm going to just move my stop loss up with the market. So if I wasn't doing any of those things, then the other thing that I would do is pivot points on the weekly time frame, because I'm trading a 4-hour time frame and I don't like using daily pivots on a 4-hour time frame. If you're trading an hourly time frame, yeah, you could use daily pivots, but I'm using a 4-hour, so I use the weekly pivot points, and I'm using the floor points, and you could see your pivot point right here. Here's your pivot. So the market came up, bounced on that pivot. Now we took this Kumo breakout, and we would look for this level first. We want to break that level. So price goes up, and then the next candle goes up and breaks over that level. So we put our stop loss up to this level. And then this candle closed way up there. And so we move the stop loss. We're safe to come back, because the market, if it goes up, and if it turned here, it may stop and come back and retrace to this level and then go back up to that level. So we got to the R2 level, broke the R2 level, closed up here, and then the market continually went way up here. And now R3, we got stopped out right on R3 if you put your stop loss on, if you put your target level at R3. Now this first target level, if you get in the market here, that's 51 pips. And then going all the way up to here, that would have gave you 129 pips. All right, so that's 129 hitting your target. I think that's a good enough trade where you don't have to say, well, you don't have to be upset by taking that kind of a profit. That's a very good profit. So yeah, you could just take that 129 pips and be good. You can set your stop loss up there, because you see that, well, you can set your target up there, because you see we broke this R2. Once you broke that R2, and when you see this right here, this candle, and then you have another candle opening up and getting to your level, if you had a level set at R2, move that up before it even gets there. Okay, move your profit target up to the next level, because we're moving to that level. And then just move your stop loss up, so that if you don't make this level, if it doesn't make that level, at least you're going to get this right here. But you can move your profit target up here now, and if you get all the way up to here, your trade will get closed out. So that's how you could trade your looking for opportunities to get out of the market. Sometimes you look at a trade, and if you look back, you can't find anything. And when, like I said, if you look back, here would be a level way back here. If you can't find it on your time frame, go up to the daily time frame if you're trading a 4-hour time frame. And the daily time frame, we get in the market here, that red line is representing we got into the market. This target is way down here. That's very far. So anything can happen between that. So yes, we would move our stop loss accordingly, but we want to have something to rely on. So we're going to go back to the 4-hour time frame. And what we're going to do is put the pivot points back in there. Now these won't go back as far as where that trade was, because that was the prior week. So if you got into the market, you could see where these levels are, and you're just going to move your stop loss up accordingly to those levels. You don't really have to have a target level set. But if you want to have a target level set, put it at these levels, and when the market's getting close to that level, move it, and then just move your stop loss tight, really tight, and then you're going to get that profit. And if the market takes off for you, then you're going to get this profit. I hope this is helping you and hoping you're able to understand. First thing to do is look for support and resistance levels, prior support and resistance levels. Make those levels. When the market gets to those levels, then start moving your market up. If you can do a 1-to-1 ratio, do that. Now here's this market is showing a 1-to-1 ratio because this move from here to here, pull back. Now this move is going to be from here to here. When it moves up to that level, it should be 100% of this move. But if you got into the market here, this is right here on the Kumo breakout, you would set a profit target first. Not a profit target really, if you ask me, just a spot where you're looking for the market to go to. And that's where you're looking immediately, because you see that prior support and resistance level, and the market reacted at that level. And if you had to take that profit there, getting in on a trade here, that's 69, 67 pips, 70 pips. But if you didn't take that, you just move your stop loss up accordingly. And then you look for the next level. Is there a level back here that's higher? And then the next level would be this. Okay, so what I see now, I made that next level. The market's here. I moved my stop loss up to here, a little bit below, and I didn't get stopped out. So I'm still in the trade, and we move up to our next level. So now we can move our stop loss up to this level, and then we probably get stopped out. But we made a pretty sizable amount of profit. So we're from here to almost up here, 143 pips that would have been. Okay, so that would have been very good for us. If you don't do that, if you're not going to do support and resistance lines, then you're going to have to do your pivot points again. And they're set on the weekly because I'm on the 4-hour time frame. So really getting into the trade back here, these pivot points would have been back here. They would have probably been a little bit different because this is a weekly pivot point and it adjusts weekly. So now, this week now, if we got into the trade here and the point was here, supposedly, we would go for that target and we just move our stop loss up accordingly. But we see this market take off. So then we could put our stop loss right here. See where we had this happening here. We could put our stop loss here, and then the market went up, came back to this level, but it didn't stop us out, and then it took off and went up to that level. So now we can move our stop loss to this level, but we want to be a little below that level, because what happens? A lot of times the market moves up, comes back down, goes up, comes right down to that fractal level right there. See it? But it pierces through a little bit. Now you probably would have got stopped out because I don't think you're going to put your stop loss that far down. So if you would have put it right here, it would have stopped you out, but you would have had very good profit. But if you don't get stopped out and price moves up here, then you just move your stop loss up again accordingly. Okay, so I hope you understand that. And then finally, again, same thing. One last thing that I do, if I have to do anything, my Fibonacci expansions. So this move from here to here to here. Where am I expecting the market to go to? I'm expecting the market to make 100% of this same move that it just made. So if I was expecting that, I would expect the market to go here. And with that, once I got into the trade, now this is making, basically this is not making an entry here though. So if you made an entry here, that wouldn't be that. This is making an entry anywhere in this area. So if we played the break of this fractal, all right, so now price moves up, we didn't get in a trade yet, then price goes back down, and then the fractal break. Here's the fractal level. Price is going up, then price comes back down. Price breaks that fractal level. We get into the trade. All right, so now we're in the trade. We have our stop loss below that candle there. We're keeping it tight, and then the next place we're looking for the market to go to is going to be here. Now we know that this is going to be a level that we'll pay attention to, and the market does react to it. Then it comes all the way back down. But where does it come to? It comes to that fractal level again. Just like I'm telling you, back to that fractal level, and then it takes off when we're looking for it to go next right to this level. So it's a 1-to-1 ratio. You can count on that for your stop loss. For your profit target. But if you don't have to set a target, just move your stop loss accordingly. If you're more comfortable setting a target, set the target at those levels that I told you, and just move it accordingly. All right, traders. Hopefully that's helping you understand how I set my how I find target levels. I'm not gonna set my target level per se. I'm just gonna have a level where I'm expecting the market to go to, and hopefully it breaks that level and continues farther, and I just adjust my stop loss, move my stop loss all the way up to that target level, and then hopefully it goes farther and farther.